Welcome to the Be My Neighbor News. I'm your lead anchor, Vernon A. Mortgage, and let's get to the news. This week, we've got a breaking story at our action desk talking about VA loan denials and how the VA loan is the most encompassing loan on the mortgage market. Makes you say, when these pro-veteran lenders have lots of denials, just raises some interesting questions, huh? Now let's get to your mortgage market update. The mortgage market this week is basically herding cats. Expect fluctuations in mortgage rates due to the amount of financial and labor data coming in. The general outlook says mortgage rates are more likely to increase than decrease going into the end of the year. The things that are affecting mortgage rates this week are labor market data. A range of reports this week will cover over job openings, job turnover, private payroll, and unemployment. The most significant update will be the BLS report, the Bureau of Labor and Statistics. This jobs report will be Friday, and strong jobs data could push rates higher, while an unexpectedly weak report could lower rates. Economic data, reports on consumer sentiment and other economic indicators could drive rates higher if they report or if they show a strong economy. Fed members will be out speaking, sharing their opinions on if more Fed policy rate cuts are needed to keep the economy strong and moving forward. And now to the action desk. Dadgummit, there is an epidemic of VA loan denials. Since my failed presidential campaign, I am going back to my roots as an investigative reporter. I'm here to report on the VA loan. I'm seeing a lot of people talking about they're getting denied from very pro-veteran companies claiming that they had weak credit profiles, they didn't have a high enough credit score, their DTI was too high, things happening that a manual underwrite could fix. So I dug into it a little bit. And we found HMDA numbers from 2023 that show some very disappointing trends. One of the largest companies with a large share of VA loans had 15,620 denials, which is really strange to me knowing how the VA loan is set up to help veterans succeed. The next largest company with a huge denial number is 7,580 denials. Both of these companies have stringent overlays and only want to lend to certain risk profiles, which is okay, but they're sending veterans home thinking that they can't use their VA loan because they didn't meet their standards when there's lots of different standards out there and lots of different lenders with different overlays where they might actually be able to use their VA loan. The first company actually has 20% of the denials of that year for the VA loan. My suggestion is I've been researching small mortgage brokers who can actually do a manual underwrite. If you fit in this box where you are outside of these larger companies' lending needs, but you still feel like you have the ability to use your VA loan, talk to a small mortgage broker. Their lenders have more lenders with different overlays where they might find the loan that fits your needs. Wow. It's crazy how the VA loan is the most encompassing loan out there, and all of these large companies have so many denials. If you want to reach out about anything, all of my contact information is in the description of this video. If you have a question, leave it in the comments. Let's grow this channel. If you want to watch another video, click here. If you want to subscribe, click here. Share this so a veteran that needs to find this can. I'm Byron Thomas, a veteran and a loan officer from Be My Neighbor Mortgage. Peace.